If you want to buy land and build a house like this one here and move out of your subdivision house like this one here, well, breaking news, you don't need 20% down like everyone probably will tell you you do. You don't need 15% either, or 10% down. You actually can do it with minimum down on several different types of loans that we offer. It's called a one-time close construction loan. So I want to break down all 5 phases real quick for you, how it works and how we qualify and the process. So let's get started. Pre-approval. This is where we're going to determine what kind of loan is best suited for you. We offer 3 types of loans on our one-time close construction loan. Conventional is going to be 5% minimum down payment with a 700 credit score. FHA would be 3.5% down with a 620 credit score. And VA is 0 down with a 620 credit score. The maximum debt to income ratios also are very high. VA is 55%, FHA is 57%, and conventional is 45%. So what we'll do is we'll go through your application and determine what your budget looks like. This includes your land, your build, all of your soft costs, everything. We'll break everything down in detail and sending you emails and breakdowns on all of this information, okay? So we'll determine your pre-approval during phase 1. That's what was the very first step. Before you go buy land or look for land or anything, we want to go over your budget to make sure we're all on the same page with everything, okay? We have a pretty good idea on how much build costs are pretty much nationwide on this. So we'll go over all of this usually on our first call after you do the application. So now that we've gotten your budget in place and got you pre-approved, we'll move into phase 2, which is helping guide you through the land and build phase, okay? With this, we got to put together a few different components on the build side first, okay? So let's section this off to build and land, okay? On the build side, we want to determine, well, what house are you trying to build? What house plan, right? You got to figure out a house plan and select what builder you want to choose. Essentially, you can pick from our large list of accepted builders, or you can choose anybody else that you want, including family, etc., as long as they meet our minimum standards, all right? So we're going to go through that process and get them approved, the builder. We'll finalize your house plans and determine what that build price is going to be. Then you'll go find your piece of land with a real estate agent, go under contract on your land, and then finalize your contract with the builder. At this point, we're going to move into the final phase of the loan side, which is going to be ordering the appraisal based on everything we gather from the builder, the plans and the specs and the contract, the plot plan, and your land contract, etc. We bundle it all together and order the appraisal, and then we move into underwriting. We lock your interest rate for your future loan, 30-year fixed mortgage, conventional, FHA, or VA, whatever that is, okay? So for this example, let's just say the rate was 7%, okay? We're going to lock in that rate, and then we're qualifying you on that future loan after the home is built. Now, with that being said, we go to closing, okay? When we close, this actually is going to start your, what I call phase 4, which is your build construction loan, right? The first loan that you get. Think of it like a giant credit card on your property. This is when you close, where the land is purchased and your builder starts taking those draws, okay? Every draw is managed by us. We will manage the builder based on the draw schedule they indicated. And so typically they'll have 6 to 10 different draws, let's just say. And every time they request the next draw, we'll send out an inspector to make sure all that work has been done correctly based on how the builder indicated they wanted to receive those draws, okay? As long as that was good, we send out the next round of the draw and continue on until it is completely done, okay? During this phase, you would have interest-only payments, or you can choose to even finance those payments into the loan so you don't have a payment while the build is going on. If you have a house that you already own and you're qualifying that way, this is a great way to stay in your current home and still build your new house and not have those payments, 2 payments at the same time, okay? So we can finance those interest payments into the loan, or you can pay those. It's up to you. It's optional, okay? So with that being said, we've moved through this draw schedule and the home is fully built. At this point, you come back to what I consider the final phase, which is really just converting the loan, the construction loan you got in the beginning, into that 30-year mortgage that we qualified you for in the beginning. So at this point, we're going to go with what was used on the line of credit. So if we gave you a line of credit for $500,000, but the builder only used $470,000, that is the amount that would be be rolled over into the mortgage, and we would also look at interest rates again. So if rates have came down at this time while the build was going on, we will float the rate down at this time. You can also apply additional principal at this time. If you sold your house at this point and you want to apply that down, then we're only going to roll over into the mortgage what was owed on that credit line for the construction. Okay, so now the build is done. We've converted it into the mortgage. You moved into the house, and now you start making your mortgage payments.